Hey there, welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It is April 13th, and let's get started with the charts. Look at this, guys. Bonds are trading really well this morning. We're at about 103.6 this morning. We got support coming in below us, this green line at about 102.72, and we have resistance above us at about 103.22. So we look at this developed range since early to mid-March. We have a nice upward trading channel just skirting right along. So here's what we have for reports. Jobless claims, PPI, core PPI, and the consumer sentiment. Kind of a mixed bag of reports, but jobless claims really weren't bond friendly. But why are we doing so well? Well, the PPI and consumer came in, and that was somewhat helpful. But a lot of it just is due to the lower stocks. President Trump made some comments on the strength of the greenback, the dollar. That really was not so helpful for the stocks, but it did help bonds out. And some of the investors are kind of hesitant on what's happening with the administration's unpredictable, what they would deem as unpredictable intervention on some of the things going on in the world. So that's, again, not been so great for stocks, but it has been really helpful for the bond market. So to kind of quantify where we're at, Freddie Mac, the sources down here, said that the average consumer in March received an interest rate of about 4.2 and paid a half a point to get there. And we are also trading, if you look at this bond chart, about 101.90. Now, currently we're trading at 103.6. That's a $1.16 difference. So if the average consumer is paying half a point and we're trading a $1.16 better, the average consumer is probably going to get a little bit of a credit back. So look at this. For the same rate, instead of paying half a point, it's probably going to get some love back. So kind of good for the consumer right now. So let's get going to the forecast. As far as the analyst outlook, they're pretty consistent on the short. They think over the next 1 to 2 days, bonds are going to be pretty bullish and do well. But they're also pretty consistent on the long term, and they're just going neutral. I don't think they really see if the bonds are going to continue to improve or if they're going to get worse. So short term is looking pretty good though for the analysts. So here's my call. I think through next Thursday we're probably going to swing between about 102.70 and 103.20. Now bonds have beat my expectations for the last 2 weeks in a row. So I'm really though hesitant to jump on the bandwagon and say, oh, they're just going to continue to get better. The investors, even if there are reports and there's reason for the bonds to get better, a lot of times the investors, once they hit a certain limit, they're going to pull their chips off the table and cash out. So be careful of that. Even though the reports that are coming out are supporting this, investors and how they trade is going to have a really big impact to us as the consumer getting a mortgage. Okay, so I think we're going to see a fee swing as on the positive side as much as 14 basis points or 14 cents, but on the downside as much as 3/8 or 36 cents. So if you're floating, I don't think there's too much to worry about. Just be careful, okay? Always be careful if you're floating. Keep a close eye on the market. So that's it for now, guys. We'd love to hear from you. Comments down below. Don't forget to hit that thumbs up. Come on, you can do it. And if it's your first time on the channel, you can subscribe. Ugly guy at the top left. And if none of this really made sense to you, you're like, hey, what's all this bond mortgage stuff mean? I just want a good interest rate. At the top right, there's Mortgage Bonds 101. Click that, and it'll give you all the basics you need to know as a consumer when you're getting a mortgage. Anyway, that's it for now, guys. We'll see you next week. Take care. Bye-bye.